Hello and welcome. This is India Market Open. We're taking stock of the futures and options space. It's turned out to be a very interesting day of trade yesterday, specifically when it comes to the Bank Nifty. And while we did see that index take out life highs on an intraday basis, there was quite a bit of intense selling in the last 1 hour of trade. But let's talk about this and let's take this ahead. I'm going to start off with the Nifty. And well, Nifty, of course, had a relatively quiet day, trading most of the day in the red, except for some time where we in fact did see a huge surge in the Bank Nifty. But the Nifty overall did end of the day with about cut of about 0.2 of a percentage point, very little change in open interest. And as far as the Bank Nifty is concerned, well, a whopping 2% up move there. Of course, at one point in time, it was up nearly 2.7%. A lot of that had to do with the fact that it was also the weekly options expiry, with a lot of call writers getting trapped and then being forced to cover positions. Of course, that also led to further, up move as far as the Bank Nifty is concerned. But eventually, we saw it come off by quite a bit distance. Of course, the open interest declined. We move into another weekly options expiry for the Nifty now. Yesterday was a day of trade where we saw a lot more writing around calls. That would be 23,600, 700, 800 specifically. And, when it comes to your overall open interest distribution picture going into today, as you can see, we have the most amount of accumulation in open interest around the 24,000 call. That said, in terms of the lower end, we have a reasonable amount of open interest distribution around 300, 400 and 500 puts. I'd reckon that will be a range of sorts as far as today's day of trade is concerned, with respect to a little bit of a support playing in. But again, these are volatile times. And especially now, a lot of these weekly expiries are also turning out to be extremely choppy. But this is as far as the Nifty is concerned. Let's talk about stocks then. We did see longs in likes of Axis Bank and Coromandel International, shorts in Indus Tower. Of course, we also had a huge bulk deal there. And Grasim and AU Small Finance Bank also looking at some amount of shorts. Among stocks which saw unwinding, we had a long unwinding for GNFC, Hindustan Aeronautics, as well as City Union Bank. Sun TV and Balrampur Chini looking at short covering. Sun TV, of course, also moves out of the F&O ban. So keep an eye on that one. But from there on, let's talk about what we can do with these markets. Well, we have Rahul Ghosh of Hedge.in joining us this morning. Rahul, morning. Thanks so much for joining in. Well, it does seem like the Nifty is looking at a bout of consolidation, but a lot of strength returning to the Bank Nifty. How are you assessing both these indices and what's the way forward?
Good morning and thank you for having me. Absolutely right. You mentioned that Bank Nifty is showing better green shoots than the Nifty. However, I would like to give a word of caution over here that the upside from these levels is very, very limited according to us. I repeat, the upside in the Nifty, we don't see more than about 200-300 points. And with respect to Bank Nifty, we don't see more than 700-800 points. Also, we expect Bank Nifty's up move to not be as fast as what you saw yesterday. And we expect that the up move or consolidation in Bank Nifty to be much slower coming in the end of June and in the July months. So that's the most important point to keep in mind. Also, as you rightly showed, that the call writers are slightly taking predominance right now in 6-7 months where put writers have been the dominant force. You see the call writers slightly trying to make their mark over here, which is another point of caution. The third point of caution would be the India VIX rising yesterday with the up move. You saw India VIX went up 5% when Nifty was up 80-90 points, and that's why the rally did not sustain, and you saw it coming back into the red again yesterday.
On that, Rahul, I believe you have the Bank Nifty on the radar this morning.
Yes, so this time for a change, we have a Bank Nifty structure. Normally, we give Nifty structures fairly simple, I beg your pardon, not very complicated. We have an upside bias, but we have a slow upside bias. So we are buying the 52,000 call of the July end expiry, which is trading somewhere around 850 odd. We are selling the 53,000 call and the 54,000 call of July end expiry. I repeat, we buy the 52,000 expiry call. We sell the 53,000 and the 54,000 call. And to hedge the last sold call, we once again buy the 54,000 call of 4th of July. Now, if you notice in this particular structure, we have two buys and two sells. So it's completely hedged. The margin requirement will be approximately 50,000 rupees, give or take. When does this particular trade make money? This particular trade makes money if Bank Nifty moves up or moves up slowly. Even if it moves up sharply, we are good to go. If it moves up slowly, also we are good to go. The interesting point about the current structure is that if Bank Nifty turns sideways or turns down a little bit, this structure will not lose money. When will this structure lose money? Only when Bank Nifty falls sharply below 50,000. If it goes below 50,000, then you will see this structure losing money. In that particular point in time, we would be rolling down the 54,000 call option, which is our second call option, to maybe a 53,500 or to a 53,000 to get in some extra credit to take care of our risk. Also, the last call, which is the 4th July call, will have to be rolled over either to the third week or to the end of July, depending upon if Bank Nifty is lower or not. The approximate risk in the trade is 1,900 rupees and the reward is double of that, close to rupees 4,000.
Rahul, obviously, the adjustments on this specific strategy will depend on the level at which, traders find themselves at several different points in time from here on until the 4th of July. But what do you think would be an ideal horizon as far as this strategy is concerned? Would it also be 4th of July?
I would say the strategy should play out in July itself and not in June. So traders will have to hold this till July. 2 points to keep in mind while you're doing adjustments for this. If Bank Nifty goes below the 50,000 mark, only, and this happens in the July series, mind you, only then will you roll down your 54,000 call sold and the 54,000 call bought. Otherwise, I don't recommend doing that. Number two, if Bank Nifty moves up very sharply, then I would suggest to hedge your second sold call. You can maybe buy a call which is before 54,000 so that you get a little more protection on the upside. These are the 2 points traders should keep in mind. Otherwise, if Bank Nifty stays sideways or moves up slowly, or if it moves down slowly, this strategy can give you an exit even before the 4th of July.
All right. Well, Rahul, from what I understand is that the maximum risk that you're assigning to this specific strategy is about 1,900 to 2,000 rupees for every one lot assigned to each of these option strikes as you put. Am I correct? And that would most likely happen should the Bank Nifty edge towards the mark of 50,000?
Absolutely correct. So if Bank Nifty goes below 50,000 sharply, that is where your risk lies. This risk also factors in one roll down where you get about 50, 70 points extra, which is the bare minimum anybody would get if they roll down the sold call.
Right. Okay, fair enough. Well, Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and also giving us this option structure, which is slightly sophisticated, of course, because it involves two different set of expiries. But what's really clear is that you do have a runway for the month of June and perhaps also the first week of July as far as this specific option expiry. This specific option strategy is concerned. Thanks so much for joining in. With that, it's back to you.